While you were waiting for interest rate relief, the Reserve Bank just changed the locks. With the cash rate parked at 360% and inflation swinging back into the danger zone, the RBA isn't looking at your bank balance. They're looking at a system that's starting to buckle. Today, I'm showing you why the pressure is rising even after rate cuts, and why 40% of Aussie households are now trapped in a structural nightmare. G'day, I'm Naeem, and you're watching CalindaReports. On December 9, 2025, the RBA made a move that sent shockwaves through the market. They did nothing. No cut, no urgency, just a warning that inflation is far from dead. We're diving into the 3 pressure points that are currently squeezing the life out of the Australian economy, from the silent drift in loan defaults to the 98% income trap. Let's break down what this means for your roof and your wallet. Part 1. The Inflation Ghost. First, let's talk about the RBA's wait-and-see game. The cash rate is sitting at 360%. After cuts earlier in 2045, from 4.10% down to where we are now, most people expected the downward trend to continue. Instead, inflation hit 3.8% in October 25. That's 4 consecutive months of rising prices. The RBA isn't just being cautious, they're explicitly warning about upside risks. This means the floor under your mortgage isn't moving until at least February 2026. The RBA wants a clean win over inflation, and they're willing to let households hold the weight until they get it. Part 2. The 9.8% trap. Pressure point number 2. The wait. In the September 2025 quarter, official numbers showed that scheduled mortgage payments, principal plus interest, hit 9.8% of household disposable income. That might sound like a small number, but across an entire economy, it's a breaking point. It's the highest share in recent history. This creates fragility. It means Aussie families no longer have a buffer for surprises. When your housing costs jumped from 14% to 16% of your total income over the last couple of years, it's not just a feeling. It's a direct hit to your ability to survive an emergency. Question for the comments. Are you finding yourself cutting back on essentials like healthcare or car maintenance just to keep the bank happy? Let's talk about the real-world trade-offs below. Part 3. The silent default drift. Now, look at the mixed signals in our credit system. Early arrears, 30-89 days, actually dropped to 0.47%. On paper, it looks like we're resilient. But look deeper. Non-performing loans hit 1.04%, up from 0.96%. This is what we call a drift. People aren't crashing. They're slowly sinking. Australians will sacrifice almost anything, savings, holidays, even business investment, before they miss a mortgage payment. But even while existing borrowers are struggling, new lending rose nearly 10% in value last quarter. We are literally pouring more people into a high constraint environment, while the central bank refuses to signal a rescue. Part 4. The rigidity problem. The final result of all this? A jammed system. Refinancing isn't an escape hatch anymore because every lender is pricing in the RBA's new, hardened path. Mobility is dying. People can't afford to move for better jobs or downsize to save money because the costs of re-entering the market are too high. The 30% threshold. Over 40% of mortgage-holding households are now spending more than 30% of their income on housing. That used to be the definition of stress. Now, it's just the new normal. Stability isn't the same as sustainability. The system looks stable because people are still paying, but the cost to our quality of life is becoming astronomical. Australia's mortgage cliff isn't a single drop. It's a long, grinding descent. The RBA has prioritized inflation over your repayment pain. And with the next window not opening until February 2026, the pressure is here to stay. Is a stable system worth it if it requires 40% of the population to live in constant financial stress? I want to know your genuine thoughts. If you want to stay ahead of these shifts and become a property insider, hit the subscribe button for your daily 3 to 6 minute update. And for more on why the rental market is also hitting a breaking point, check out this video right here. Thanks for watching Calinda Reports. Catch you in the next one.